All right, guys, it's July 13th. Welcome to Coldwell Banker Dynasty. We have a special treat for you. And I just wanted to invite you guys all to join us with Arc Home Loans as our guest speaker today. They're going to be talking about financing and talking about different areas of how they can help a lot of our different types of customers. Our customers come from all different backgrounds and they come from all sorts of financials, 1099 earners, independent contractors, FHA, maybe they own a business. And so with that, I do wanted to just let them know that they have a solution for practically all of us. And they're very great. They provide really great rates. And at the end of the day, I wanted to definitely make sure you're aware of what they can offer. So with us, our provider is Lisa Overman. I'm going to ask her to step in 1 minute. But before I do, I just want to give you a little background about Lisa. And Lisa used to be our brand ambassador for the company of Coldwell Banker. And with that, she knows a lot about the tools that we have, the technology, the procedure, all the things that Coldwell Banker offers all of our agents through the MyCB Desk platform. And she knows about Zap, and she can know how to leverage a lot of those tools while you're working with buyers and sellers. And I think it's really great relationship to have a really strong lender under your tool belt that you can call up and you can get quick answers for your clients and really shine in front of them when you're presenting out there. So with that, I'll start with Lisa to come on over and Alex over to join us as well. And they're going to say hello and introduce themselves. Yeah, why don't you introduce her first and then I'll start sharing.
Great. Okay. So I'm in this really odd twilight zone right now. So don't mind me. There's 300 of me if you just look towards the back. I'm Lisa Overman. I am your former brand ambassador for Coldwell Banker and those to you out there as well. Hello again. So some of you might recognize me. I probably did a training like this maybe 18 months ago was my last one. Thanks COVID for keeping me out of everyone's lives for the last 18 months. But I'm here now with Arc Home Loans. I am a loan originator, but here at Arc, we consider ourselves and entitle ourselves relationship managers. So you might notice this tagline or recognize this tagline from Coldwell Banker. We were built by agents for agents. So the purpose of our team is not just to be number crunchers on the other end of the phone telling you, okay, your rate today is 2.75 and tomorrow it's going to be 2.85. We're here to support agents. So we're the ones answering the questions that maybe you don't even know exactly how to ask, right? So you're like, I don't know, this borrower has a really odd situation. I'm not sure which questions to even ask this person or where to get started. That's where I come in. So you can call me, text me, email me, and I will help you get those answers as quickly and as efficiently as possible. So that's a little bit about me. I was with Coldwell Banker, like Kelvin said, for about 5 years. So I know all of the transitions you all have gone through. I know the Zap transition, the CBX doesn't exist anymore. Now we're on Desk. We don't have CB Exchange. We have Moxie has just been integrated. And we have all of these tools, right? And it's really hard to leverage all of them and bring them all into your ecosystem while still servicing your customers, which is what you should be doing, right? You should be out in the field, talking to your people, helping your borrowers, helping your buyers, helping your sellers, and growing your commission, right? So we want to help you do that and alleviate a lot of stress on the lending side. Like we have, like I tried to do on the Coldwell Banker side. So I'm now trying to do that on the Arc side. We also have a couple of really cool tools for you that will help kind of bring that all full circle, bring in, pull in some of your Coldwell Banker stuff, pull in your door knocking experiences and your pounding the pavement out there and make your business a little bit easier and hopefully grow exponentially. So that's me. This is my actual supervisor, Alex Richardson, all the way from New Jersey. So he flew in just special just to see you guys here on Zoom and in the room. Thank you for those of you who are both on Zoom and in the room. Alex has 10 years experience in the industry. He's done literally everything you could imagine in the mortgage industry. So if you have a question and I don't have an answer, this guy does, which is why I brought him because he has all the answers to everything. Do you want us to do the presentation now?
Yeah, absolutely.
So if you don't remember me from the past, I talk 300 miles an hour. So if anyone wants me to slow down, just throw something, yell at me, pull the plug, cut my mic.
So it's a real pleasure to be with everyone here today. So I'm joined Arc to build out an excellence program. So I've been in lending for about 10 years, like Lisa said, and I always had a passion to work with agents. And I really saw a gap, let's call it a gap in the market where, all of you work really hard to build a brand, such as Global Luxury, and to build an experience for your customers. And my passion was delivering a lending experience that helps you build that referral, right? That makes your clients feel special and really delivers the same level of class that you here at Dynasty work to deliver to your customers. So founded the Excellence Program, branded the Excellence Program, and am fortunate enough to work with Arc that offers such a wide array of products that we can really speak and help buyers that a lot of folks can't. So really excited. We're a national leader in non-conforming financing, and we'll get into some of that today. But really want to be a one-stop shop that delivers a branded value experience for you and your clients, and can help you ultimately close more transactions and build a referral business that really is the real estate business. So really excited to be here today, and thank you for having us, Kelvin. I appreciate it.
Great. I'm going to start pulling up the screen and the slides. I'm just trying to figure out how I can get which window we're at. So hold on one second. And there it is. All right. So now you guys should be able to see the slideshow. Perfect. All right.
So Alex gave you 2-minute background on him. I will give you the other background of why I decided to go from Coldwell Banker Corporate to being a lender. And it was because of bad lender experience, right? So I own a couple of rental properties myself in a different state, and I didn't even realize how bad the lending experience was until I got through it. And I looked back and I was like, oh my gosh, I feel like I was done a great disservice. So I purchased a new property in March of this year, 2021. I was operating remotely. The seller of the property was in Texas. I was in California. The property is in Missouri. And I had done 6 previous purchases and or refinances with the same exact lender. And I didn't realize that they should have been paying attention to me at all, responding to my emails, my calls, my texts. I just figured it is what it is. This is just an internet service, and this is what I get. Thank you. So we were, I think 9 days out from closing, and my lender was, confident they could get the deal done, confident we would close on time. And I kept asking, I haven't seen any closing disclosure. I haven't seen any documents. What is going on with my purchase? Am I going to be able to buy this home? And then 2 days before closing day, I got an email from my lender. She says, okay, you're ready. You're clear to close. Here's your closing documents. She sends them over to me, and she had missed a $10,000 seller credit to me. And I sent back and I said, where's my seller credit? And she said, oh, you never sent it over. I forwarded her the email. I said, I sent it to you on January 17th. Here it is, clear as day. And she says, oh, well, that's unfortunate. Delayed closing by 9 days, which means the seller had to fly back in from Texas because they had pre-signed and already gone back to Texas. I had to leave Missouri without closing and getting keys to my new home, all because my lender overlooked the document, didn't follow up with me. I never got I'm sorry I delayed your closing by 9 days. I'm sorry this caused people to take extra flights. I'm sorry this cost people money. I'm sorry this, that, and the other thing. I just got an automated email that said, congratulations, your property is closed. You're now a homeowner. I'd done, like I said, 6 other deals with this lender. And that was how they treated me. And I was like, I'm not nobody, right? I should get a little bit of a better treatment. So I didn't ever want that to happen to my relationships in the industry, whether that's real estate agents or borrowers, even sellers, right? So you're going to open houses with sellers. You really want to wow them. You want to convince that seller that you're going to do everything you can to bring a qualified buyer. So I never wanted anybody to have that experience. And this opportunity arrived, and I was like, wow, this is rare. This is where I fit in this niche. I have worked with real estate agents for years. I am a real estate agent in the state of Missouri, and this is just my niche. So here I am, and I've already told you a lot about me. This is our Arc Home Excellence Program, as Alex mentioned. So aside from unparalleled loan solutions, which we will get to, we also have unparalleled communication, right? Our team is really small. So I have the ability to call Alex up on a Saturday and say, hey, Alex, can you answer this question for me about this loan file? We have somebody that needs a pre-approval by tomorrow night. They really want to make a strong offer on this property. If we can get them pre-approved, we think we can get that deal done, right? So I have that connection to my team, which is really, really cool. I really like the small team feel and being able to have that really open and communication. To be perfectly honest and transparent, prior to coming to this meeting, Alex and I sat at a cafe for 2.5 hours working through somebody's loan file that is just a really, really obscure file, and they're not your traditional borrower. They don't have your traditional income situation. And we just went back and forth, like, what can we do here? What can we, can we move something? Can we have them do this and do that and clear this and clear that in order to get them the best deal for their money and to get the property that they want? So that's kind of how we work. Close-knit team. We all came from the same kind of similar background. So that's our Arc Home Excellence team. That's me. If you don't recognize me, that's me.
By the way, guys, she's like 6 feet tall. She's super tall.
I am 5'8.5"
There you go.
on a good day, but I'm always wearing very tall heels. So yes, today I'm every bit of 6'1". Alex might be 6'3". I'm not entirely sure. And I still talk 300 miles an hour. So welcome. So our story, I kind of already gave you the background, the brief on our story. That's our story. Our team is made up of all me, right? So I have me in, I think we cover 40 to 50 different states. We cover a lot of states, but there's 12 others of me that have the same background. We all came from a relationship management background, working with real estate agents like yourselves. And we decided that this was where we kind of fit in. I already mentioned we are built by agents for agents. So all of us, I think all of us except for maybe 2 or 3 are actually real estate agents in the past.
So it was a really cool experience, right? To take folks that have lived and done your job, right? And then bring them onto the lending side, because a lot of the pain points, you have to live it, right? You have to have the client that misses the closing and has a moving truck outside and doesn't know where they're going to live tonight, and they have 2 kids and 2 dogs and they're calling you for an answer, right? So I really wanted to take folks that have that level of experience and bring them into lending because they get it, right? And that's something that's always been very real to me, is delivering service and experience. So Lisa's background is by design, and it's been really cool to see that work and grow in our business.
I've also been to many sales meetings where I hear lenders talk about the 30-day treasury bond, or yesterday's rates hiked by 0.5%. And like, I get 2 sentences into that and I'm like, even on the lending side, I'm like, what? I'm like, that's great. Thank you for that information. So I really like the constant communication. Like we say here, communication is paramount, keeping everybody in the loop, keeping everybody apprised of the situation, not just updating you daily on what the rates are, but really what's going on with your clients and what's going on with the market. So guaranteed on-time closings. Alex just mentioned you have a seller or a buyer or both who are trying to get their deal closed on time, right? We all expect on-time closings, and every lender promises an on-time closing. That's across the board. That's nothing shocking. I'm not scaring you by saying we promise to close on time, but we do guarantee our closings, right? So if we miss a closing deadline and it's any fault of our own, we miss a document like my lender did, or we just make a mistake, we goof up, it happens. We're all human. We're going to pay your client's first mortgage payment up to $2,500. So that is protecting your commission for a reason. Somebody's unmuted on the Zoom. We did that for a reason, right? We wanted to protect your commission. We didn't want you to have to get to the day before closing and know that it's going to be delayed, and you are terrified to call your borrower and tell them, right? You shouldn't have to do that. I'll do it because I can do it and also say, but like, don't worry, we will pay your first mortgage payment. And the customer is so much happier about that. I mean, if you would have offered to get them a hotel or get them a storage unit or get them, some sort of a compensating factor to make up for that pain that the lender caused them. Because at the end of the day, you guys are the ones that have your customers face to face every day, not us. We're usually on the other end of the phone or on the other end of a text message. So you're the one that gets to walk in and say, you know what, the lender kind of goofed, but don't worry, they're going to pay your first mortgage payments. That's a really good feeling. Our next guarantee, industry leading interest rates. So we write a guarantee into our home excellence program that if your customer brings us a like-kind deal, they bring us a 30-year fix at a 2.99% interest rate, and everything is the same as what we're offering, and we can't beat that 2.99, we will give your customer a $250 gift card just for giving us a shot. What's the harm in trying, right? And even if your customer doesn't want to do it, you offer it to your customer. Hey, I know you have a lender, but I have another lender that if they can't beat the rate that you have, they'll give you a $250 gift card. Your customer might not even do it, but that you get to say it to them. And then they feel like you've added value, right? So that's our guarantee. You can pass on to your customers. And reduce fees for clients. So I've been told, rumor has it, we are the second least expensive origination cost in the industry, only to be beat by one giant who they build it into their APR. So our closing costs, we credit your buyer a $750 credit at closing to reduce our origination cost by 50%. So that's another thing. Go to your customers, go to your borrowers and say, hey, I have a lender I want to talk to, and I'm going to ask them to waive 50% of their fees for you because I know the market's tight and I know the closing costs are expensive. I'm going to ask them to do you that favor. And you're going to come to me and I'm going to be like, yes, of course, we'll waive half of our fees, which is a reduction of $750 in cost. This is the fun part. So if you're not on list reports, is anybody in the room on list reports? No. Okay. List reports is awesome. So I can tell you how awesome it is. You're on list reports, Sylvia, right?
Yes.
So list reports, you know, so thank you. I'm going for 20 today. Calvin, you're on list reports too already. Okay, so list reports, for those of you who don't know, like I said, I worked for Coldwell Banker for 5 years. I know all the products, I know all the systems, I know all the procedures, and I know how cumbersome they can be getting logged in to everything, right? You've got a separate login for everything. Moxie maybe spits out one report that you like or one listing presentation that you like, and you have to PDF a flyer out and send it out that way. List reports does that all for you, and it's free. So if you want to get on list reports,
can you repeat that again?
It's free. It's free. It's free for you guys.
Yeah.
So how it works, you link up with me in list reports, and if you put a listing into the MLS, it pulls in all of your data from the MLS and creates you an automated marketing 25-piece marketing kit. Sends you an email. It says, hey, your marketing kit is ready. Just listed flyers. You can pull just sold flyers. There's pre-listing packets in there, open house flyers, pulls in your data, all of your copy from the MLS and all of the photos from the MLS, and just creates it for you. You can share it to social media. You can print it at home. You can have it professionally printed, send it straight to FedEx if you want. It's all done for you. It also creates independent property websites, sign writers, links, text codes, you name it. Anything and everything we've tried to bring into the Coldwell Banker product suite as in the ecosystem, List Reports does, and it's free to you, and it's one single sign-on, and it pulls your properties right in. So if you want to get signed up, I'll stick around after this, but I will provide my email address, and all you have to do is shoot me an email with your email address, and I will connect up with you, and you can check it out and see what List Reports has to offer. Now the really, really fun part that Kelvin wanted us to talk about until we're blue in the face, right, Kelvin? All of these fancy mortgages. What kind of, we're gonna call them fancy, not weird, fancy. So we have your typical out-of-the-box 30-year fixed conventional financing, home ready, home possible. We've got FHA, VA, and jumbo prime. Those are all normal, right? You can go to any lender and get those products. What we have that's a little bit different is we're a direct lender. So we're backed by a private equity firm with a whole lot more money than I could ever imagine. So we can create proprietary products for your customers. So if you were unaware, recently, March 1st of this year or April 1st, maybe it went into practice, Freddie and Fannie put a huge squeeze on investment products, right? So investment loans, I purchased an investment property in March of this year. My rate was 3.25%, and I was annoyed because it was that high. Today, that same loan through that same mortgage lender would not be doable in the first place. And if it was, it'd be around a 6.5% or a 7% mortgage rate, right? So we have a proprietary product that we've introduced through our lender, through our direct line. We can finance up to an 85% LTV, credit requirements that match Freddie and Fannie prior to the squeeze, and our signature low rates for strong credit customers. Alex, you're gonna keep me honest here. We just wrote a couple of investment loans last week.
Your high threes, low fours. So
High threes, low fours.
Speak closer to the mic.
yep. So high threes, low fours in terms of rate, and the why Fannie and Freddie exited the space. The belief is they want to take them public again. So they've been in conservatorship since 2008. They want to lower the risk and higher the return on their portfolio, and there's a much higher default rate on second homes and investments. So they're trying to shift their risk coefficient so they can do an IPO again. But it's really, caused a lot of hardship in the market because, like Lisa mentioned, we're in Cape Cod, we're in Charleston, we're in Florida, a lot of second home, California, a lot of second home markets. It's been really hard. So it's really nice to be able to come back with a product that kind of meets that need. And one of many non-conforming products we have is this investment second home product. And really excited because it matches Fannie Mae's guidelines and again, really competitive rates to keep investors in that game. And where our competition is kind of trying to figure it out. So, and that's, I'm sure it's a big part of your business, right? You have investors that you work with and second homes, it's a thing. So to be able to, again, help you get more deals done, we're very nimble and quick to respond.
So you want to know the silver lining of the squeeze by the GSEs, the government-sponsored entities, Freddie and Fannie? As an investor myself, I was looking at the squeeze on the market and I'm like, oh man, I'm not going to be able to get that low rate on my investment product. Is it hard for investors? Yes, it is. But it opens up an opportunity that you can help educate your borrowers, right? You probably have some buyers right now that are so frustrated with this market, with the critically low inventory, that they're ready to throw in the towel. You can go to them and say, listen, the GSEs, don't say the GSEs because they'll be like, what the heck is that? Some of the bigger loan bodies that buy in the secondary markets or that are purchasing these loans have put some guidelines out that are kind of stopping investors from purchasing right now, August and September. It's going to be a lot different for the next 2 months. you're going to see a little bit of inventory shake out of that because investors aren't running right out and buying these properties up out from under first-time home buyers. So you can offer a little bit of guidance to your borrowers. You know, I understand you're frustrated, but like, keep with me for the next 60 to 90 days while all of these regulations come down on these investors and the GSEs are trying to squeeze out investors to open up more market share for first-time home buyers. So even if you're not working with investors, you can still use that information to work with your borrowers and say, listen, like things are changing behind the scenes. And this has not been highly publicized. I haven't seen anything about it in your Market Watch news. It's just, they're kind of keeping it hush hush. So you can work both sides of that deal. You can explain to your borrowers who are not investors that things might loosen up here a little bit in the next 60 to 90 days temporarily. And to your investors, the game isn't over. You can still get in. We have a product for them. Non-QM. Here is the fun part, I would say. So non-QM, this is, again, this is why my team was created. Relationship managers were created. I go out in the industry. I talk to real estate agents all day, every day. A lot of times when I say, oh, we offer non-QM loans, they're like, So non-QM just means non-traditional, right? It doesn't mean that you are not qualified in any way to get a mortgage, even though that's what non-QM stands for. Non-QM is non-qualified mortgage. So that doesn't mean that you are not qualified to get a mortgage. It just means you're not going to get a conventional, conforming, cookie cutter 30-year fixed. We can still write you a mortgage. 1099s, gig workers, even if you're self-employed, a lot of physicians actually have to go non-QM mortgages. For one reason or another. So the way they structure their taxes, or foreign nationals, or what's another good example? Bank statement loans we can offer through our non-QM product. So when a customer comes to you and says, hey, like I am a real estate agent, but I also drive for Uber, but like I also work 35 hours a week at Ralph's. And, in total, I make $150,000 a year, but it's split up between all of these 3 things and 6 things. And my W-2 salary is really only $18,000 a year, but I've got, $60,000 in 1099s from this company. And I've got a 1099 NEC because I won $100,000 on a game show. We can work with that. These might take a little bit longer, but you don't have to tell that borrower like, nope, you are a nightmare. Go away. Like, let me go through it and see what we can put together. These take a little bit longer, but borrowers in those situations are a lot of times just so relieved to hear that there is a solution for them, right? So in that little suite, we have alternate income. So those are your bank statement loans. These are really good for 1099 workers, really great for real estate agents. So I don't know if any of you are looking to purchase a home, but bank statement loans, 12 and 24 months, asset utilization, 1-year full doc loans, DSCR, clean slate. So these products, I have a rate sheet that I can pull up in a minute that kind of helps break down what these non-QM products actually are. So when I just say DSCR, you're like, that doesn't mean anything to me, and I don't even know how.
So let's dive into a couple different pockets and kind of like walk through some scenarios of who would fit. So alternative income, right? So if someone is self-employed or owns a business or rental properties, a lot of times they can take advantage of a lot of write-offs or a tax strategy that their financial advisor or accountant advises them on. But when they go to buy a home, and you look at their tax return, it doesn't look like they're making the money that they are necessarily making because of the deductions and depreciation they can take.
Your tax accountant and your lender are not friends.
Right.
Just because, that way.
And the reason is the lender has to look at the 1040 because that's kind of, if you're self-employed, that's the litmus test of you're not going to pay taxes on money you didn't make, right? So that's how the lender kind of uses a tall bar for what the income is. So with our bank statement product, we can look at 12 or 24 months of bank statements and derive income just from them. So we don't have to look at the tax returns. We don't have to look at 1099s or W-2s. Literally, we can do a loan just on bank statements. So think about self-employed folks, perhaps, that you knew were highly qualified restaurant owners, business owners, real estate agents that had a lot of write-offs. They couldn't afford the property. We would have another way to do that loan. And the nice part is Lisa can look at the tax returns and look at their whole situation and find a way to do it, right? Or the best way to do it based upon the, the outcomes or situations that we have. And these aren't small loan amounts, right? Especially that being in California, $3 million, right? So it's not like, we can do a bank statement loan, but we can only do up to the county loan limit, right? So these are not small loans. DSCR stands for debt service coverage ratio. So what this means is for your investors, we can do a loan just looking at what the property rents for. So we can look at what it rents for, what the property costs, and do a loan. And a lot of these loans are combinable. So what do I mean by that? you can be a foreign national, meaning that you have residence and earn income in another country. So if say you're in France or China or Japan, we can actually do that loan up to a 70% loan to value up to $3.5 million. So if someone wants to buy a second.
What's that? Oh, did we?
Yeah.
We were just talking about that on the way over here. For those of you on Zoom, we believe we just had an earthquake.
There's 200 earthquakes a day.
Yeah.
California.
Yeah.
This one I actually felt that.
Oh,
Did you?
wow.
I didn't feel it. I guess it's
Yeah.
just maybe I'm just shaking it.
Is this similar to like a stated income?
Not so stated income, I would say was subprime, right? So we
Yeah.
want to be responsible. So this is it's alternative documentation. So we're going to look at 12 or 24 months of bank statements, look at the deposits that are coming into the account, and come up with an annualized income figure based upon that. So as opposed to a stated income is, hi, I'm Alex, I make $200,000 a year, and you're like, okay, let's do it. That's a little reckless, right? We're documenting it, but we're not documenting it the traditional way through tax returns. We're looking at their bank statement over a series of 12 or 24 months. And a lot of the programs are combinable, right? So you could be a foreign national and do DSCR. You could be a foreign national and do alternative income, right? So there's a lot of cool things that we can do because a lot of countries have restrictions on how much money you can take out at a given time. So we definitely, our two most popular products are the bank statement and foreign national, to be totally honest with you. And they're really a market that I think there's a lot of qualified folks, but unfortunately they just don't fit in this box that traditional financing can help. So this is a lot of what got me really excited about building the excellence program, because it's one thing to call it an excellence program, but like, how can you deliver value, right? You can give a great deal to a customer. It can feel the way that your branding feels. We can do more deals. Like, it starts to all kind of add up and make sense and have some substance behind it. So that's it's really cool. Clean slate. This is someone who's had a recent credit event, but their credit's recovered. So let's say they've had a short sale or they've had some sort of adverse credit event. 12 months after that, up to an 85% LTV, we can take a look at that loan. Again, our most popular is alternative income and foreign national, but be happy to kind of go through and detail some of the other ones based upon a scenario that we have. So
When you talk about bank statements, 12, 24 months, does it have to be a U.S. bank?
yes. So, and how that product works, you can actually use business bank statements or personal bank statements, but it has to be from one account. So, because you can't have, you can't move money from one account to, it has to be deposits coming in from a business, obviously a business endeavor that we can annualize and come up with an income number. And I would say rates on those programs are typically 2 to 3% above market. It's not like it's a 10% interest rate. It is slightly above market, but for folks, it's a different risk coefficient. And for folks, it could be their only option, right? If they want to purchase a home. And again, there's always an option too down the road if they wanted to restructure some of their taxes, that they could go conventional. They could always refinance and do that as well. So a lot of cool options that we kind of have in our back pocket.
And this is something you can help guide your borrowers or your buyers as well. It's something I was really confused about. And to your point, 2008 was a meltdown, right? And we don't want to put our customers back in that situation. And when I learned about non-QM products, non-traditional borrowers, these non-traditional loans that we're doing, I was like, I don't want to touch that. I'm not going to be that person. I'm not going to be somebody that bankrupts a customer. There's a purpose behind these types of products. And if they're treated properly and they're promoted properly to the right people, they serve their purpose in the space, right? To Alex's point about, refinancing in 3 years, or this is, you buy this home or you have no home. That is some people's situation. And I'll give you an example. It's one of my rentals in St. Louis, where I own my rental properties. I had a former tenant come to me and he was like, hey, do you have any properties available that I could move into? My situation has changed. I really need a place to live. He doesn't really qualify on income alone. He does not make a lot of money. And by not a lot of money, I mean, by Missouri standards, he does not make a lot of money. And for my income qualification, he does not meet my requirements. But to his point is what he said to me is, if I'm not going to rent from you, I'm going to rent from somebody else. And I'm not going to find anything any cheaper than what you're renting this home for. And you and I have history together. And it kind of clicked with me in my head that that's kind of the point of some of these programs as well is, I'll relate it to a meme. A lot of these people that would be qualifying for these programs and utilizing these programs are probably paying an exorbitant amount of rent, right, to live wherever they're living, or they're going to end up paying an exorbitant amount of rent in Los Angeles County. They're going to move here and they're going to be paying $3,800 a month to live in a 2-bedroom in Pasadena. So they can utilize one of these programs and pay probably a similar mortgage amount per month. They're building equity in a property. Maybe their note rate is 5.5% or 6%, but they're building equity, right? They own something, they have ownership stake in it. And if they're a good credit worthy person who just has like an interesting income situation that's not documented the way that we're used to seeing it, it's to their benefit to be able to get into a program like this to better their financial future. And then, like Alex said, refinance in a couple of years. You can help educate them on that. But usually a lot of times the borrowers will come to you and explain that situation to you. And they'll say, listen, I'm going to pay $3,800 a rent to live in Pasadena, whether it's a rent or it's a mortgage, I'm going to pay it. I would rather it be a mortgage so that I can at least build some equity and have some home ownership stake in something, right? So I don't mind paying 5.5% or 6% for a mortgage like that, as long as I'm building equity in the property. And if, you know, an educated borrower is going to say that to you, and they're going to be like, well, will anybody lend me that money? You know, I've got $500,000 in the bank. I just can't afford $1 million home outright today, but I need something to help me get in.
Right.
That's what this program is for.
And a lot of times people's finances are very complicated, especially if they're, you know, involved in a lot of business ventures, and we start asking for tax returns and business tax returns, and, you know, it gets so complicated. Sometimes they're like, I've had enough. Right. So these kind of programs, especially for a very complicated borrower, just showing 12 months of bank statements, money comes in, money goes out. They're just happy to be in and have it done. So it really, again, we're not looking for, let's call it the low tier credit profile. It's just non-traditional borrowers, if that makes sense. So that, and we can really help them where a lot of other lenders have, you know, can't. So it's really exciting. And this is always changing. So changing in the sense of adding new different products as we start to see other qualified markets that are underserved. And that's kind of where this came from, was qualified individuals that are credit worthy, right? But just perhaps their income comes in a different way than, you know, a conventional loan is used to looking at.
Do you guys work with PIN numbers?
Yes.
Yes.
That's the next slide. So
Oh, it is the next slide, isn't it? Sorry, I get stuck.
So Agency Plus, we can go up to a 90% LTV with no MI. And I want to highlight that too. Our jumbo program is 10% down. So I know a lot of jumbos are 15 and 20% down. So, and that's up to 3.5 million. And we also have a proprietary product. So again, I know it's frustrating as an agent that when you have a borrower that you know is qualified and you're trying to like play matchmaker with like 4 or 5 different lenders just to try to get them done. Part of, you know, what my vision was also was being able to be a one-stop shop, right? Where you can focus on listing and selling properties, and Lisa can go through the menu of products, knowing someone's financial situation, and come back and say, we got them pre-approved, going to have to go non-QM, it's going to be an asset loan, we can close in X amount of time, and then you're off to the races and that's done. As opposed to having to call Joe and Sally and Billy and try to rehash the whole story, right? Put them in touch, and then it's a bad client experience too, right? Because they start to question about buying the house. For me, this is getting too complicated. So really trying to deliver an experience that allows you to be more efficient at your job and help the client get into a house. So ITIN numbers, we can do those as well, up to 75% LTV, up to $1 million. So a lot of cool different products. And again, to this menu now is second homes and investments. So when the market demands something, we're very quick to respond. And I think we're number 4 now in non-conforming nationally. So we're definitely a big player in that space. So it's really exciting to roll this program out. And by the way, it's the first time Arc has ever offered these programs direct. Previously, you had to go through a broker to get them. And when I had the conversation with our CEO, it was he was really excited about it, and I was too, to be able to, for the first time, offer them directly from us. So it's pretty cool.
To Alex's point about growing frustrations in the buyer sphere, the borrower sphere, it's helpful to help coach your borrowers and your buyers because it's going to keep them on the hook longer, right? So inventory is what it is right now. We can't add more inventory to the market. We can if you guys want to go knock on doors and drum up listings. But until we get there, your buyers are getting frustrated. So it's nice for your borrowers or your buyers to hear from you. Listen, this lender is essentially an investigative journalist. She or he is going to ask you for everything but your firstborn child. But the more documents you give them up front, she's not looking like, I'm not looking to turn you into the IRS because you didn't file your 2020 taxes on time or your 2019 taxes on time. We're trying to find the best solution. So I think a lot of times buyers get intimidated or frustrated with lenders because they say, oh, well, I gave them my W-2s and then now I have to give them 15 more documents and now they're asking for my rent compensate or my rent roll and I got my nails done last week. Do they want to know about that too? Yeah, we do. We do want to know about that. But we want to know about that kind of stuff. I need mine. We want to know about that kind of stuff because we're not being predatory. We want to find the best solution. So when somebody comes to us and immediately it looks like, oh, you're an easy W-2, 30-year fixed conventional mortgage, that might not be the best option for them because what if they need liquid for something else? What if they don't want to put a full 20% down? There are a lot of different options for borrowers in this space. And it's us working as a team, I'll say, us working as a team together to educate those borrowers so that they don't get frustrated with me and they don't get frustrated with you. Because if they get frustrated with me and they want to stop looking, you're going to be frustrated with me. You're going to be frustrated with them. Everyone's frustrated with everybody. We want nobody to be frustrated.
Right.
So prime your buyers and just, if you have a good understanding that maybe they're a gig worker or maybe they have non-traditional income, just prime them a little bit. This lender or any lender is going to ask you for a ton of documentation. Just prepare yourself for that mentally. And when she does, she's not looking for anything crazy. She's looking for the best solution. That's my soapbox.
And
Lisa,
so,
may I ask a question?
Absolutely.
yeah,
So, I apologize for being a little late. My question, I know, right? I'll make that quick. My question is for either one of you. It sounds like you're the relationship connector. You're the matchmaker.
Me, yes.
Yes.
Matchmaker.
So who's beyond you? Once I bring you a client, they bond with you.
Lisa is the originator. Lisa is the loan officer. There's
Okay.
no.
Got it. Okay.
Sorry,
Great.
I didn't mean to cut you off.
No, not a problem. Okay, cool, perfect.
So you're the underwriter.
I'm not the underwriter. No, please don't put that on me. Please don't put that on me.
Yeah.
Alex is the underwriter. No, Alex has the underwriter's cell phone number. So
Yeah.
So the cool part is, I've done the business a lot of ways, and I know that having someone local who is the loan officer is the absolute right way to do it. And it's nice to have a team where we can bounce ideas off each other. So, for example, I had a situation before in the national, and we were actually able to help the agent get a deal done because we can actually do a cash out for a foreign national. We cash out one of the properties, help put a deal together that takes some of the equity that they had and purchase another property. So we can do a lot of cool things. And because we're, a really well-connected team, Lisa will have a situation, we'll talk about it. We'll get input from somebody else, from me, from Carter, and kind of work together to help you put a deal together if we kind of understand the way that you want to wire it.
and we don't know the answer to this yet, but to Alex's point of us being super connected, as we were driving over here, I got a Facebook message from an agent that asked me if we could write a loan for somebody who doesn't have a green card. I don't know, can we? So we're going to take it back to our team. We'll figure it out. Do they have a visa? Do they have this? So what documentation do they have? It can be an immediate yes, but it's also not an immediate no because we're super nimble and connected. We can ask those questions.
And a lot of the products we continue to expand. So I know in Florida, I'm sure it's somewhat of a thing here, depending on where you are, unwarrantable condos. We can lend on them. So a lot of different types of property ownership types. And we can, for example, condo hotels are very big in the Myrtle Beach, South Carolina area. I took that back. We're evaluating it right now. We can't do condo hotels because I think we want to understand how that ownership structure matures. But there's a lot of cool different property types. And as we see different needs in the marketplace, it's nice to be able to go back and work with, mom and dad being Angelo Gordon to say, hey, is there a way we can do this? And then come back and deliver a solution that helps you guys close more deals.
Angelo Gordon is our investor. So that is where we get our money. That's where our
And we're owned by them.
Our
So
pocket fleet.
and so we don't broker it out. So it's nice. We can talk to mom and dad and say, hey, how can we figure this out? And we can get a deal done.
Do you guys do mobile home loans?
We do not do mobile homes.
What? Oh, I was just going to say, we were talking about frustrated buyers. And so one of the things that I've been coming across as a broker is how can we prep our buyers? And can you explain the differences and if between a pre-approval letter and a DU approved buyer?
So we don't do pre-quals. Hi, I'm Joe. I make 200 grand a year. I have 100 grand in the bank. Give me a letter, right? It's okay. Are you self-employed? Are you W-2, right? I need 2 years W-2s. I need 3 months of bank statements. Where's the down money going to come from? Because the accurate approval letter embarrasses Lisa and embarrasses, an excellence program. Yeah, and it embarrasses you, right? So, we read our letter, when you as an agent receive that to know that this is a solid buyer, whether you're a listing agent. And the only way that we can earn that reputation is by doing the right thing and being thorough in what we do. So we'd rather ask for the documentation up front. And by the way, it makes the rest of the process easier. When someone finds a house, they're they're, thinking about a home inspection, they're thinking about a moving truck, they're, going to Ethan Allen and looking at furniture, right? They don't want to hear from us. So if we can get that done up front, it helps us close on time and get the deal done. So pre-quals, we don't do them. So everything is a DU approved, meaning that we've scored it through DU. If they're self-employed, Lisa has a scenario desk. So really neat. And one of the things we structured at ARC, Lisa has the ability to email an underwriter just to get an opinion on something and get an answer back like this. So if something's a little questionable, hey, for example, can you do a loan?
We're best friends.
For
For
someone, or can you take a look at these tax returns? What do you think? We can get an answer back from an underwriter like that to help move those files along quickly. Sure.
Excellent. So here's a scenario for you. This could be your first client. We have a seller,
Okay.
Mr. and Mrs. Seller. They're both not working right now.
Okay.
They're both on, one's on workman's comp,
Okay.
disability. They do have a 401k. They
Okay.
want to sell their house and they want to buy.
Okay.
I don't want to be the one to kill their dream. That's where I would turn to someone like you, Lisa, and say,
You killed their dream.
yeah.
Yeah. You can,
Right?
you can always blame me. If you want to blame your lender for something so you don't lose a relationship, absolutely. Just call me and tell me what you're doing so that I don't think I'm losing the relationship with you.
Yeah.
Call me and say, hey, can you deny this buyer? I'm like, on the low? Sure. I mean,
Yeah.
if they're deniable, right?
And-
And
there's a couple things
kill the
that you said
relationship.
that triggered me. They have a 401k, right? I mean,
Yeah.
let's be real about where we are. I mean, someone could have millions of dollars
Right.
in a 401k. So maybe we could do an asset loan, right? So an asset loan looks at how much money they have, what they're looking to borrow, and says, okay, we're good with that. And maybe that they'd be fine with an above market rate because that's where they are. My next question is, well, what's the likelihood of this disability to continue? Do they have disability insurance? Do they have long-term disability? What does that look like? Could that deal work that way? And then number 3, it's articulating a plan, right? It's not Lisa saying we can't do it, click. It's saying, here's what we need to get the deal done. You get back to work, you stay in the same line of work, income looks like this, we can get it done, right? And then that's going to create glue for you and glue for Lisa, right? Even if someone's credit challenged, we have credit repair people that we work with, right? If you help someone fix and better their situation, they're not going anywhere.
Right. You're establishing that relationship.
Right, and helping people, right?
Right.
That's what it's about.
Right. We're helping each other. So VA loan. If there's someone if we have another buyer that has a VA loan and they want to purchase another home up 5 on a VA loan.
Okay.
Is that something that you can handle as well?
Yes, so are they looking to keep the property or are they looking to?
Looking to sell the property.
Okay, so VA loans have no limit, asterisk, right? So it's really marketed, right? The VA has a limit. Well, that's not really true. So VA will go up to the county loan limit at 100% financing. For every dollar over the county loan limit, the buyer has to bring 25% on the dollar, right? So it still can make a lot of sense, right? If they're going to buy $1 million house, the down payment is only 25% of the delta, right? So say your county loan limit, say 22, right? You just have to bridge that gap. So absolutely, we could help them do that. And my only question about selling the property was, would they have to refinance to free up their VA eligibility so they could buy the new property? But if they're going to sell the property, then that's no problem.
Okay, you already sold me. Thank you.
Yeah. So yeah, I mean,
I'm
it's
just gonna bring it with me everywhere.
well, and this is what it's
Both of you.
well, and this is what it's about, right? Being able to work together to get deals done and come up with, articulate a plan. Because
Right.
we have another situation where we have a borrower that wants to free up his VA eligibility. So we're going to do a conventional refinance because he has equity in the property. We're going to free up the eligibility. We'll turn him over VA approved to the agent. And we were able to kind of navigate that and get it all done in our articulated plan.
I love how you both speak and how you both explain things and how we're able to have that mutual dialogue.
Yeah.
In plain language where it puts me as a professional at ease to where I can turn around and put my client at ease as well. So
Absolutely.
I
it's a
really
rare
appreciate it.
quality. It's a rare quality.
Thank you. And, and that's where it was funny. I was flying back from Florida and I had taken the position at ARC and, I was wondering how we were going to roll this program out. And I had this idea of an excellence program. I had a piece of paper and I started writing things down and how are we going to build it and how are we going to put it together? And what was important to me is it had teeth and it had reality behind it, right? And it really, I really appreciate the compliment. Thank you.
Of course, because you have the teeth and we have the boots on the ground.
Yeah.
So I took a couple questions from the field in here. I want to see if anyone on Zoom wants to ask any questions or situations or scenarios.
I have a question.
Can you guys still hear me?
Yes. Do you hear me, Calvin?
Yeah, Nilafar, go ahead.
If you do DU approval, can you close in 2 weeks?
Okay, if we do a DU approved person, can we close in 2 weeks? I'm going to say that the DU approval definition means the person is qualified and their finances income is approved. That does not necessarily mean that, I'm sorry, I'll let the lender speak, but that does not.
I love it.
That does not.
It's a team effort.
That does not mean that the
Property.
property is qualified or approved. It still needs to go through an appraisal.
Accurate. So there is a situation, there's a space that could happen. It's not impossible. We could potentially get an appraisal waiver. They're rare. So we can't make any promises on 2 weeks, but we can't also say that it's impossible because we have done it. It has been done.
Brittany would kill me, who is our director of operations. We've done miracles, right? So we really try to structure it. I hold all the relationship managers around the country to taking very clean applications, because I know as agents, you're going to have that, right? Perhaps some of the first deals that you'll throw us is a deal that another lender had that's on fire, right? Maybe you're a listing agent and the buyer, got into trouble and you're like, okay, talk to my lender. So we have done closings in 2 weeks. I don't want to make that a regular thing, but if we have to pull off a Christmas miracle, we'll do everything in our power to make it happen.
That's all.
Christmas miracles.
And
I mean, because
I live really close to that.
but like, you all don't show up and get a paycheck, right? Like you
Right.
get paid, your mortgage gets paid when the deal closes, and when the deal catches on fire, that could drastically change your family's situation. So if we can fix it, we're going to fix it.
Question, how available are you Monday through Sunday, 24 hours a day? How available are you?
Very available.
Yes.
I don't live right down the street. I live in Studio City.
That's where I was raised.
I love it there. I really do. I was just telling Alex how much I love my neighborhood. I'm here for you. I'm available. Call, text, email, anytime. We don't work. I'm not a PowerPoint person. I don't know if y'all realize that, but I'm not a PowerPoint person. I clicked through and I didn't read a single word on any of the slides. We don't work.
Your honesty.
Thanks. We don't work bankers hours.
Yeah.
We work realtor hours. What is the point of a lender only being available 9 to 5?
There's always situations that pop up.
Realtors work 5 to 9.
That's right.
So
Right.
I'm here. I'm around. I have a text message. I have an iPhone. I have Zap. I have Zap. I don't have Zap anymore. You guys are stuck with Zap.
Yeah.
I have WhatsApp. I have Facebook Messenger. My only request is just pick one medium to communicate with me.
Yes.
Don't Facebook message me, then text me, then call me, then email me and ask if I got your one message, because I got it all the places, but I'm not sure which message you were trying to get to me. I only say that it's mostly a joke because my mother does that to me. She would call me and then text me and then email me and then send me a Facebook message and then a Snapchat. And then she's like, did you get a message? I'm like, which one?
Or WeChat.
Yeah, or WeChat. I'm like, Mother.
So, and again, we really.
Yes, to answer your question, I'm here.
Yeah.
I'm available.
Thank you.
And that's for all of our team, right? So
That's
whether it's
important.
myself, Brittany, because you work hard and someone's ready to do it, right? You need the team to be able to execute. So we get it. That's how, it's how all of us pay our bills, right?
Yes.
Person closes on the house, Lisa gets paid, I get paid, you get paid. So we got to make ourselves available.
Now, this is a silly question,
Sure.
but it's asked constantly. Are there any hidden fees?
No, so I'm glad you brought that up. So maybe it's a little convoluted when we say we cut our fees in half, right? So a lot of lenders will charge junk fees. What do I mean? Application fees, underwriting fees, processing fees, and then they leave with this really low rate. But it's like it's kind of
Baked in on the back end.
dishonest because of all these other fees. So we have one fee. It's a loan origination fee. It's typically $1,500. Usually lenders are probably between $2,000 and $3,000. We cut it in half to $750. Like, especially in this market, like people need, sometimes it's an appraisal difference, right? They're trying to get into that house. They need every bit of money they can. And it'd be kind of wrong for me to call it an excellence program, say I'm going to deliver value to your customers and then hose them on fees. That's not right. So we're very straightforward and transparent. And that's why we have our low rate guarantee. We want to look and see like what someone else is doing. So they're not bamboozled by, a rate of 2.5% and then $10,000 in fees. Well, We could do that deal, right? But it's not really honest.
So I appreciate that. You mentioned earlier about a $250 gift card.
Yep.
Okay, just to be pre-approved.
So how it works is if another lender is going to beat us on price, right? So the last thing I think anyone in this room would want is to introduce your client to a lender. Then they shop. And then they say, well, you introduced me to Lisa, but she was taking advantage of me. Now you're embarrassed, right? Now is that person going to send you another a referral?
Right.
Probably not, right? Because when you refer someone, it's a reflection on you. So that's our way of saying, look, we're going to take care of your customer. And if they go around and find someone else that's willing to do it for less, we'll meet it, we'll beat it. And if we can't, we'll give them $250 for their consideration.
Got it.
So it's really saying that we're going to be really, really aggressive on price. And again, I think the biggest compliment that we could get as a team is when someone says, I'm so glad I work with Sylvia. She referred me to Lisa and saved me all this money.
Thank you, Alex.
So that's kind of the nuts and bolts behind why we do it.
Nilafar had a question, and she just said, are you guys a direct lender, a
Yes.
warehouse lender, brokerage?
We're a direct lender.
And how would that benefit the agents or the clients?
So brokers are always beholden to someone else. It's not their money, right? So when they lend, it's high. Maybe they're going to shop with United Wholesale, Freedom, Mortgage, Wells Fargo, us. We also have a broker and correspondent channel where we buy from brokers. But you got a lot of hands in the cookie jar, right? You got a lot of people that have to get paid. So rates are typically higher. And it's
At a broker.
and you're dealing with someone else's underwriting, right? So hi, I'm Joe, the broker, and I take the application. The underwriting decision in majority of cases is made by the person who's purchasing the loan. And I don't want to get too far in the weeds. It goes into repurchase risk if the underwriter makes a mistake, who's on the hook. But being a direct lender, we do all of our own underwriting. It's our money that's being lent, and it's really less chance of things going sideways. So it gives us a lot more control.
So how many $250 checks have you guys written?
None.
Good answer.
Good answer. Now,
And-
if you did, where does that, you've heard that saying nothing is really free, and if there's something given to you, where is it really coming from?
Sure. So in terms of the low rate guarantee, I would say it's the cost of doing business, right? I mean, if someone else is really competitive, we all sell in the secondary market. That's just the reality of lending. If someone else is willing to do it cheaper, I look at this as an ecosystem, right? So, some deals you're going to have to go really thin, maybe perhaps to make it work. So it's the cost of doing business.
Yeah, there's nowhere we can physically take it from, because if we get beat on rates, we don't have a deal to,
Right.
to add the money into. So it's just coming out of our pocket.
And the close on time guarantee, we're not in the business of making people's mortgage payments, right? To be candid, we're really in the business of collecting mortgage payments because we service our loans. But it's a way of, instilling confidence, because I say the homes are selling themselves, it's selling offers, right? So if Lisa can pick up the phone, perhaps, and call a listing agent and convey, obviously with permission, but with privacy, that the buyer is qualified, and probably the conversation ends there. You can say, look, if the lender misses a closing, they're guaranteeing to make the mortgage payment. Like, the deal's good. Like, it gives you
That's
as
deep.
an agent
Yeah.
confidence. When you're going up against other offers, to say, yeah, there's financing, but it's solid.
So I heard you say you service your own loans at
We-
Arc Home Loans,
We do.
and then I also heard that it depends on how much you resell it out. Isn't that
So
isn't that conflict?
No,
What's
so-
the ratio of
so-
servicing?
here's how it works. So when any loan closes, the assets split in two. So there's the mortgage bond. So let's say it's $1 million loan, right? There's the $1 million, and then there's what's called the mortgage servicing rights, which is two. We retain all the mortgage servicing rights. So when you look at Quicken Loans, you look at United Wholesale, you look at Mr. Cooper, formerly NationStar,
What about Logic?
Logic, even any of them. No one is retaining, unless you're a depository, meaning you're a bank or credit union, you're not keeping that $1 million on your books, right? You're selling it to Fannie Mae, to Freddie Mac, to someone else. But what you are keeping is that second asset, the mortgage servicing right. So it's your name on the statement every month. It's you that they call. So you can sell the loan on the secondary market, but you can retain the servicing. When you're a correspondent or a broker, you're selling it servicing release. You're selling both assets together. So that's how, like, your servicer right now, literally all they own is the right to service your loan and solicit you as a borrower for future business. So it's
Well said.
yeah. So
Yeah.
it's really neat, kind of how the mechanics of it work.
Nice.
But
I'm impressed by both of you.
Thank you.
Any other questions from the Zoomers or from the tables over here in the group?
We're here all week.
Question.
Actually, we're still here until Thursday.
So
I'm here all week.
I'll share their contact info because I really like what they have to say, and I'll start, I guess, a summary of what I heard that's really a plus for all of you as to share with your clients. I mean, number one, you can check and look at your past closing statements with your lenders and see what they charge for the total fees, origination charges, and this and this and this, and the processing fee and application fee, and plus the appraisal. But they are willing to take off 50% off of your origination fee. So that's a $750, and you go ahead and look at what you're paying for origination at other closings. Okay, you have a $250 gift card if just for trying to make sure that your client gets qualified and or beat someone's rate. So they'll put their money where their mouth is. They're guaranteed to beat the rates if they can, as long as your clients, provide them the effort and give them the financing or give them the statements. If you don't close on time, Arc, if they don't close on time, Arc does pay your first mortgage payment up to $2,500. I haven't heard of any lenders doing that. So, hey, they're incentivized to make sure they get on your close of escrow date. And the loans for all types of situations, non-QM, foreigners, 1099ers, restaurant waiters who get a lot of tip income or maybe cash income from they own a laundromat. They might have a solution with bank statements. They might have a solution, or if they don't, they'll tell you up front within, a quick turnaround time, they'll be able to review and at least say they can't do it. And that's what you want. You don't want a lender that's just going to tie you in and then make you cancel your escrow and kind of like a roller coaster ride. You don't want the emotions of, yay, we got the property, we got accepted, and then 2 weeks later you got to cancel because you don't have a commitment from a lender. I told Lisa specifically, if you can't do a loan, tell the agent and the clients you can't do it. And she guaranteed that. She said she's going to make sure, that's why she's going to ask for a lot of documentation up front, because she has a promise to me that she's going to make sure, yes or no, she's going to be honest and truthful. And if she can't, she's going to tell you she can't, which I respect honesty, even if it's not what you want to hear, because some lenders will tell you what they want to hear all the time, and then they're going to let you down. So I hope you guys appreciate that. Anything else you guys want to share? Or
Sure. There's one more thing. So when you have a foreign national program, I think this is an important component. Lisa has a loan officer assistant that works with her, who's also fluent in French and Spanish. And we have a full team that's fluent in Mandarin and Cantonese. So when we kind of think about different buyers and different folks, the transaction will be facilitated in English. Right, but we have originators and processors that can speak fluently and explain things in someone's native language, which, if I was buying a property in another country, I would appreciate that, right? So I had a firm understanding of it. And what I always recommend, though, is if someone is going through that experience, whether it's with Arc or with someone else, that they have someone that, that is, can be their advocate, that is fluent in both languages, right? They can read everything and look, because I think it just as for them as a buyer, it makes them a bit more confident. But we do have the ability to deliver that experience, which I think is kind of sets us apart and really helps us, again, kind of live up to an excellence program, because that's what someone would expect.
Great.
Other than that, thank you guys so much for listening to us ramble for the last hour.
Anybody have any questions?
Mike has a question.
So if we get a client,
Sure.
we bring them to you, do you guys meet here if we want to?
I can.
A lot of times the clients want to meet face to face with the lender.
I can do that, sure. I'm just in Studio City.
Okay. So do you have an office or?
I do. My office is in Beverly Hills, though. So I don't want to make them. You want to go to Beverly?
Okay.
Yeah, we have an office in Beverly Hills. It's very small.
Do you have parking or is it paid parking?
Yeah, everything paid parking.
The thing of my existence, Alex.
It's
Paid parking. There's street parking. It's on Wilshire.
Yeah, well, sure.
You mean a Starbucks?
It's
Parking.
there is a Pete's directly across the street.
You can get the code of that.
Right? It's the high rise on Wilshire, 8333 Wilshire, 8383 Wilshire Boulevard is where my office is, on the 8th floor.
Now, we just sent a client over to Nashville, Tennessee, and they're going to buy property out there. Are you able to help with a loan in Nashville, Tennessee?
Yes.
Who's in Tennessee?
Brooke is.
Yes.
So
Okay, so would you be the go-to person? Okay.
I'll connect you. So our team, we're very broadly covered. So I cover California, Arizona, Colorado, Indiana, Missouri, Michigan, Arkansas. And then I match up with like Brooke she overlaps with me on Missouri and Arkansas, and then she's got Illinois, Tennessee, so we're covered throughout the country. It might be I need to call Brooke, but truth be told, I recruited some of my team members from where I came from because because they're like clones of me. So you can trust that you'll be in good hands with them as well, and I'll keep you in.
Excellent.
the only states we can't
Mhm.
is Nevada.
Today.
So we're working to get Hawaii. And the only reason is those states require you to have a physical branch and a physical person. So Hawaii is very high on our list, given Lisa's proximity and relationship she has there.
And don't worry, I'm not moving to Hawaii because Coldwell Banker offered to move me to Hawaii, and I said no to them too, so I'm not going.
So, but again, we can help you all across the country. And so it's all my team. So we're, again, like Lisa said, we're very connected. So anything we can do to help you wherever we can do that.
Love that. We'll talk after.
And likewise, right? So Lisa, a lot of times could get it from her counterpart, right? Maybe an agent has a client that wants to move out to California, and she'll call Lisa and say, hey, who would you recommend? Right? That happens more often than you might think, where can you recommend a real estate agent, and Lisa can help with the one.
I just had that in Missouri yesterday, and my answer was no, I don't have a good real estate agent for you in Missouri. Really sad. I grew up there, and I was like,
So
still on the search.
Okay, so before you leave, we have 2 clients for you.
I'll take them.
All right, that brings us to the end of the training. Let's give Lisa and Alex a big round of applause. I'll send their information out with an email with a website link and how to get in touch.
Yeah, we'll get you list reports too.
And list reports as well. So that's a marketing tool for you guys and help you guys with your flyers and give you just some information about your properties. So if you don't know about the stuff, we'll share an email soon. I highly recommend you try them or do your refinances and see what it's like for yourself. So I know they're already starting to work with us at Dynasty, and I love the relationship because I want to make sure we're having great management and relationship and servicing and all that stuff. So thanks for being here. I'm going to stop the recording and see you guys. Our next, we have a sales meeting next Wednesday.
Thank you. Oh, thank you.
Thank you.